For immediate reaction, our next guest predicted March inflation to come in at 3.5%. Well, with us now from our Rockwall studio is Julian Tarrobago, the head of equity at ATR Asset Management. It has 125 billion pesos under management. Good to have you back on, Julian. Welcome to the program.
Happy to be here. Thanks for having me, Kathy. Morning.
All right, so you're just a tiny bit off there at 3.5%. Inflation came in at 3.3. What do you make of it?
We're happy to be off a little bit. That it's a positive surprise that inflation is actually lower than what we were expecting and what the market essentially was expecting. 3.3%. Pretty good. What
were the variables that caused you to over-exceed the actual figure of 3.3%?
We thought the impact of oil would have been more pronounced in the print. Obviously, the other factors were a pleasant surprise. So 3.3% means maybe a stronger likelihood of cuts in the reserve requirement. And one could argue as inflation approaches 3%, if it goes to 3%, it builds the case for actual rate cuts. Or prospective rate cuts in possibly as early as the third quarter of this year.
So how soon do you think the RRR would come? Do you think that could happen inter-meeting from the Philippine Central Bank?
I wouldn't bet on that, but maybe in the next meeting, that's, I think, a significant possibility as inflation continues to go down.
Now, how does this influence your full-year forecast inflation of 3.3%? Will you be making adjustments?
Yes, we're actually looking at about 3.1% at this point. If inflation decelerates in a bigger way, one could argue 2.8, 2.9% for 2019 is not out of the realm of possibility.
So if that's going to be the case, what's the impact on growth? What about your GDP forecast? Because you've got a forecast for 6.2% for Q2 and 6.6% for the full year.
Full year, we're still staying at 6.6%. Obviously, the inflation print, I would think, bodes well, or we believe bodes well for household consumption. And that being the case, that would provide a pretty high-quality driver for GDP growth from the consumption side. But you also have to consider that at least in the near term, for the first quarter, you could see some softening of the GDP growth number because of delays in the passage of the budget. So all things considered, we're keeping our 6.6% GDP growth for expectation for 2019. But I wouldn't discount the possibility of this maybe needing a slight adjustment downward as we still face uncertainties with regard to passage of the or delay with regard to the passage of the national budget.
All right. So how do your economic forecasts then impact your tactical and strategic positioning for the fund that you manage? The Alpha Opportunity Fund turns out to be the best fund performing among the Philippine equity funds, turning in an 11% return this year. That is pretty much double than the PSEi. Just see the wide gap there between your fund and the PSEi. How can you keep that margin wide with the kind of changes that we're seeing in economic growth as well as inflation?
We think the changes we're seeing in the economy are significant, but expected. As I mentioned in our last conversation early this year, Kathy, we're staying the course. These are better than expected developments, but they're not really totally unexpected. The trajectory is what we were anticipating. It's just the magnitude of the direction of rates or inflation that's keeping us a bit on our toes. But these are positive surprises for us and bolsters or reinforces our bullish view on Philippine equities over the long term. I think in the short term, markets might be ripe for a bit of consolidation as you have possible delays in the budget resulting to maybe a soft GDP growth number in 1Q or the first half. But then again, you have the MSCI China A-share rebalancing, which could present a bit of an overhang with, I don't know, $200 million potential outflow. But on the other hand, we're staying positive because the long-term story remains quite strong for the Philippines. The growth story is strong. We anticipate GDP growth accelerating in the second half. We were encouraged by pretty strong fourth quarter 2019 corporate earnings growth numbers, which we think will carry over. The momentum will carry over in 2019. And foreigners are relatively light on the Philippines, or they're actually out of the Philippines. If you look at foreign ownership levels, they're actually at quite at troughs or very low levels. These are levels at which upon which foreign investment usually comes in or starts coming in a big way. So you combine that with a strong fundamental growth story for the country, for the Philippines, it's just a matter of time before foreigners come in a bigger way. And that's important because as significant it is for locals, for us to believe in the Philippine story, we won't get to unprecedented heights for the market without foreign participation. So we think it's still a very strong story. Of course, there are macroeconomic imbalances that have to be prudently managed over the long term. We're not worried at this point because we trust that those imbalances will be addressed.
Just a final point, Julian. For the year-to-date numbers, your fund is underperforming the PSEi still. So how are you intending to ramp up from here on out? Which sectors will you be rotating in and out of?
Okay, first of all, just to correct you there, Kathy, the fund is up 13% against the PSEi, which is up about 5 or 6%. So it's actually outperforming the PSEi. It's actually more than double the PSEi performance. We're staying the course, like I told you in the first quarter this year. We still are in basically industrials or construction companies. We like property, we like consumer, and we like banks this year.
All right. Well, thank you so much for the assessment, Julian. Much appreciated. Julian Tarrobago of
You're welcome, Kathy.
ATR
It's a pleasure.
Asset Management in Rockwell.